Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Doomberg. I definitely got to start off by just getting your take on the Strait of Hormuz situation. I mean, it seems like the markets keep rallying. The AI trade it seems like it's back in effect, especially when you look at some of these memory stocks. And I think Dell has went up a crazy amount of percentage in the last month. And so, are the markets interpreting this correctly? Is there a ceasefire? Is there an agreement that's going to be coming out soon? Just want to get your thoughts.
It is a great mystery of our time, of course. And you're even embedded in your question is an interesting philosophical construct. Are the markets getting this correctly? Great piece out this morning by Jack Johnston, Sir JJ over at Market Vibes. Gives his views as a sort of 50-year veteran oil trader about the humility of observing the market and taking the market as the truth and then trying to figure out where your analysis went wrong. And there's far too little of that going on right now. He likes to call them, hair pullers, people on Twitter that are practically demanding that oil should be higher instead of maybe checking their thesis. First thing we did in the weeks after this war broke out was admit that, we were surprised that oil isn't higher. And here we are all these weeks later, the strait is still ostensibly closed and the oil WTI is in the high 80s. So what's different? This is what we've been thinking about for weeks, not when is the collapse going to come. If there was truly a collapse to come, the market would be pricing it. There is always one exception, of course, which is if war restarts and Iran follows through on its, what we think is a credible promise to truly destroy the oil and gas infrastructure in the Middle East, well, then all bets are off, and who knows what happens after that. But the markets are pricing in a détente/ceasefire/new reality, and it doesn't hate what it sees. And so you have the oil markets behaving relatively docile. And then that has freed up stocks to continue on their parabolic Ponzi-style run, which is a whole different analysis. Look, do I think the AI multiples being assigned to U.S. technology companies are justified given what's going on in China? No. Am I dumb enough to get in front of that freight train and short it? Of course not. Bubbles can double and triple and quadruple in your face. And you could be right the whole time and broke. I'd rather not be broke. So we just observe it. We're pondering a piece about what Huawei's recent announcement means for the AI bubble. But the risk in writing that is people think, oh, you must be short the market, when we're not short the market. To answer your question, the strait is closed. Markets are adapting. Inventory has, these strategic reserves have served their purpose. And the market must be pricing that the U.S. is not going to restart the military campaign and that the U.S. doesn't necessarily have the munitions to start the military campaign. Maybe that's what the market has settled on. Who knows?
Yeah, for sure. Yeah, I've been definitely pondering on that. And you bring up some great points. Oil obviously has been on decline in the last however long. I've just been looking at the WTI and such and seeing it declining. So I'm kind of curious in your thoughts on, because pretty much, when this happened, many studies and analysts were saying, okay, well, 20% of the globe's energy comes out of there and such, and out of the strait, and the strait is still closed. And so I'm like, okay, is this just mostly pulling from strategic reserves, or like how is the price not higher?
So we wrote a piece all the way back in April 18th, called Backwards Looking, Making Sense of Oil Prices During Times of War. And, a lot of stuff has changed since the Arab oil embargo of the 1970s, for example. There's just a huge amount of oil in inventory whose purpose is to insulate the economy from times like this. The speed with which oil can be brought to market has shrunk. And more of the oil is circumventing the Middle East than people previously thought. But then I think the final answer to the riddle has to be China. China is by far the biggest player in the seaborne crude oil market, largest importer. It is also the biggest black box in the market. It's very difficult for Western analysts to get an accurate assessment of what's going on in China. So if you just take a step back logically and say, the biggest player is the least transparent and we have a giant mystery, maybe the mystery's happening inside of China. And I think that's intellectually quite a defendable position, especially in hindsight, as most positions are, I suppose. So China has radically cut its imports, seems to be doing just fine. It was buying an enormous amount of oil before this war broke out. Pretty good trade, buy cheap, sell high, or buy cheap and not be forced to buy high, which is the same trade. And they're in a position to help bail out their neighbors with refined products, and they don't seem to be all that panicked at all about it. And so I think the market, when the war broke out in Ukraine, there was this spike to like 125. And so then that was the most immediate analogy for the closure of the Strait of Hormuz, which is 3, 4, 5 times bigger than the fear that hit the market after the war in Ukraine broke out. But one of the things the market learned, again, benefit of hindsight, is that the oil trade is far more resilient than sanctions or even attacks on tankers and so on. There's just this whole ecosystem designed to bring oil from the well to the refinery that is really resilient, hard to truly stop, and even the closure of the Strait of Hormuz hasn't meaningfully done it. So what does that mean going forward? Like, what does it take to get $150 oil if you're a bullish oil investor? That's a question we've been pondering. We haven't written about this yet, but if this fact set doesn't do it, what fact set will? I suppose the destruction of the assets in the Middle East would do it. But is that really your bull thesis? I'm going to get long oil because I hope that the Middle East gets blown up and I make some money on the trade? I don't know. It's a fascinating time. And I do observe all this hair pulling on Twitter and this ridiculous comment that the U.S. tanks are going to run dry in July. Like, this is on television. Somebody with significant pedigree said it. I won't name them, but like, how can you hold yourself out as a responsible analyst and say things like that? Clearly, all the evidence is to the contrary. So,
yeah, for sure. What do you think about this meeting with Trump and Xi Jinping? There's a few different narratives that came out of it. Some people say Trump and all these CEOs went over there. And nothing really came out of it except like 200 Boeing jets. I know that the issue of rare earths came up and such. So curious on your thoughts on that.
Yeah, look, I think it's hard to say what came out of it because history teaches us that what actually transpires in these meetings is not made available to the public or historians for years or even decades after they happen. Superficially, it looks like not much happened. It looks like it was mostly a social gathering. There was nothing of significance in the readouts. And even this 200 Boeing jet order, the market puked on it, and it doesn't seem to be a firm order with contracts. It seems to be a promise to maybe consider it at some point in the future. To be clear, I haven't studied it too closely, and so maybe I got that wrong. I don't own Boeing stock, and I don't really care. But not much came out of it. And then Putin comes the next week, and a lot of stuff came out of that, although not the biggest one. Another thing that we're writing up is there was still no formal sort of declaration of the beginning of construction of the Power Siberia 2, which is an interesting observation. Still sort of pondering what that means. But the Chinese are just sitting there basically doing nothing. You have the U.S. depleting its munitions in Ukraine, and you have the U.S. depleting its munitions in Iran. And last I checked, neither of those is Taiwan. And we have this amazing letter from Zelensky to Trump. I don't know if you saw it, but practically begging for Patriot missiles because Russia is about to, tonight, we're recording this on Friday, there'll be another massive onslaught of missiles into Kiev. Kiev is defenseless today. The U.S. is emptying its embassy in Kiev. If you listen to Kaya Kallas, Europeans have decided not to empty their embassies. I suppose if one of their diplomats gets killed, this will be used as a reason to escalate, or to demand that the U.S. re-engage in Ukraine, more accurately. So we have the U.S. depleting itself in two wars that China's interested in, but aren't next door to China. So why would China do anything? Just hang tight, see how it goes. Will the U.S. be weaker or stronger in a month or 2 months or 3 months? That's the Chinese calculation. They don't need to negotiate now. They have the rare earths. They have all the food they need. They've implemented protectionist policies. They've stopped the exports of sulfuric acid. They've limited exports of rare earth. They've limited exports of phosphate fertilizers. They've controlled the exports of refined products like diesel and jet fuel. They got all they need. They're self-sufficient. They can just hang tight, see what happens. React to facts as they evolve. The classic sort of chess move. Play the long, careful middle game, knowing that you have a winning position, and I think that's what they're doing.
Yeah, definitely. Seems like they're very strategic in how they operate. That's been my observation. So, thoughts on the UAE leaving OPEC and this whole thing with dollar swap lines and such. How are you looking at that? Is that significant?
Yeah, it's certainly significant. I think it is a marker for the inevitable decline and end of OPEC. There's a lot of intrigue behind that decision. Since I read the propaganda on all sides, I can only tell you that from the Iranian perspective, this is not Doomberg's opinion, but it's an interesting observation, that the Iranians believe and tell themselves that the UAE is a proxy for Israel, and that the UAE is doing Netanyahu's bidding. And the other Arab Gulf states know this and treat the UAE accordingly, which is why anytime there's any kind of a dust-up, Iran attacks the UAE and not Qatar, Bahrain, or Saudi Arabia anymore, because the other Arab Gulf countries kind of don't want the war to go on, and the UAE is still sort of, as Israel's proxy, engaging with Iran militarily. Again, as an observation, that is an interesting way to look at the news flow. So when I was reading that, when we were reading that as a team, pondering what it means, and then suddenly you see the UAE exit OPEC, you think, so to the extent that the UAE is a proxy for Israel and the US and Israel are allies, and who knows what the US relationship is, you see them getting a swap line, you see them leaving OPEC, you see that basically the US has flipped this OPEC member, and combine the UAE leaving with the snatching of Maduro in Venezuela, and you see the end of OPEC. Venezuela is a founding member of OPEC. Who do you think Venezuela is going to listen to at the next OPEC meeting? I would venture a guess and say Trump and Chris Wright. And so with that hint of the UAE being different than the other Arab countries, then you see that headline. You could observe that headline through a different lens.
Yeah, because I've also been thinking about the relations with Saudi Arabia and the U.S. as well, which that's been kind of interesting, just thinking of like the BRICS and Saudi Arabia at one point was supposed to be a part of the BRICS or something. And then there's also this relationship with the U.S. And then when Iran was, attacking some of the nearby infrastructure and such, many of these nations over in the Middle East were, upset or reaching out or, things like that, putting out kind of things about, how this situation has escalated in the U.S., needs to do something about it. And so, I don't know, I've just been kind of thinking about that and just trying to figure out, how to process that.
Let me give you another clue on the Saudis then. Again, because we try to read everybody's propaganda. The Saudis are afraid of the Houthis getting involved in the war, and the Houthis control, the chokehold in the Red Sea, which is the major escape valve for Saudi Arabia vis-a-vis the Strait of Hormuz, the giant east-west pipeline that was built exactly for this purpose, is moving 5, 6, maybe even 7 million extra barrels a day out of the Middle East that might have previously gone through the Strait of Hormuz. At these prices, that's replacing an awful lot of lost revenue for Saudi Arabia, and it would be a real shame if the Houthis got into the war and shut that down. And there's a deal that's been struck between Iran and Saudi Arabia. The Houthis didn't get involved in the war in the first 39 days. They have not yet. And there are rumors, credible rumors, that the Saudis are paying the Houthis billions of dollars to stay out of the war. And I believe it. And so now when Iran warns that if the U.S. and Israel attack it again, the Houthis will not stay out of the war, that's actually a warning to Saudi Arabia. And then Saudi Arabia is probably relaying that concern to Trump, which is why the hostilities have not started. And why we're concerned that if they do, well, then all the hair pullers on Twitter will be proven right.
Yeah, for sure. Okay, so pivoting to fertilizers. So there was a lot of talk about the amount of fertilizers that come out of the Strait of Hormuz, and I mean the increase in food prices. I'm trying to get my words together. I keep mixing words together, y'all. I'm working through it.
It's early on a Friday. What can I say?
But yeah, so fertilizers and the increase in food prices to come from that disruption. Any thoughts on that?
Yeah, we wrote a piece on sulfur earlier this week, which is sort of indirectly tied to fertilizers because you need sulfuric acid to make phosphate fertilizers. I think, again, if the markets can rally and adapt to the closure of the Strait of Hormuz for oil, they can do it for fertilizer. There's a huge amount of ammonia capacity around the world and plenty of natural gas. Phosphate is a pretty easy material to ship. Sulfur is a solid. As we wrote in the piece, half of the volume that was coming out of Saudi Arabia through the Strait is now coming out the other port. Plenty of sulfur in the world. That we opened the piece with a picture from the Alberta oil sands of giant yellow buildings of sulfur. I mean, they're huge. They look like data centers, and it's just sulfur sitting there in the middle of nowhere. And so, I think if the economy can adapt to oil, it'll figure it out on fertilizer. And then finally, when I look at the sort of futures curve for corn and wheat, soybeans, it's hard to find it. I don't see it in the market.
Yeah. Okay. Yeah, that was something that I was looking into as well, and so I bought some call options on wheat and corn.
Whoops!
They're not doing what I thought they were going to do.
You know what my friend Tony Greer says, right? When you're thinking about buying call options or put options of any kind, slam your hand in a drawer as hard as you can, and then think again.
Yeah, that would have been helpful if I would have did that for sure. Definitely. It wasn't too much though. But right. So earlier we started off with kind of like the AI stocks running and I mean just the bubble just keeps going on and on. I'm curious in where are you all now on commodities and the commodities supercycle? I mean, because these data centers are going to need a ton of like these natural resources and stuff, and so just curious in your thoughts on there, because it seems like the commodities run has cooled off significantly. Well, I mean, copper's still kind of elevated, but yeah.
We wrote a doom zoom a couple months ago called copper, imminent supercycle or mostly hype. Long-term real price of all commodities is lower real price, not nominal price. And it's just hard for us to get excited about owning them. Occasionally there's shortages. They're almost always followed by gluts. They're pretty hard to time. There's better things to own. Much more interesting to us to own a technology that enables commodity volumes as opposed to just a pure commodity play or the commodity itself. And nothing about the current market changes that view. We did a deep dive on copper. Look, I think we did a pretty balanced presentation. We looked at the bull thesis, and then we gave you the opposite view, and you can decide which is operative for you. There's a lot of copper in the world. Let's just give you one example of an argument that we hear the copper bulls make that we could spin around for you. The average grade of copper being processed at a mine is as low as it's ever been, right? One way to spin that is the mining companies have gotten really good at economically extracting lower grades of copper, and that opens up an enormous amount of copper, because the lower the grade you can tolerate, the more of it there is. If you could only mine, high percentage grades of copper, then there's not many of those in the world, and you might run out. So as the copper miners have gotten better and better at economically extracting copper from lower quality grades, that opens up a pyramid, the base of the pyramid of low quality grades of copper all around the world. And so you could spin the bullish arguments to be bearish ones depending on your time horizon and your current portfolio allocations. A lot of people, talk their book, which I get. Look, there's two schools of thought in this world. If you don't have money invested, you don't have a voice because you don't have skin in the game. And then the alternative view is, if you have money invested, you're always talking your book and you can't be objective. And obviously, we're in the second camp. But it's also, I suppose, easier to talk about markets when you're not in them. And we recognize that, but that's just the camp that we're in.
Okay. So a couple of my bull thoughts. I gotta get your challenges or the opposite side of the story on this. So what about the? I think it's been 10 years since we had a new any large copper discovery.
Yeah. Well, look, the market's clearing, isn't it? I mean, I don't know. The demand is being met. And by the way, there's an enormous amount of unrecycled copper in the economy that could be recycled at the right price. And every year that the market clears and demand is met, that base of recyclable copper is just waiting there. So if copper does get to $7, $8, $9, $10 a pound, you're going to start seeing copper being ripped out of everything and sold to copper recyclers. And so much of the copper that is, quote, produced is still circulating around in the economy, right? And so I just think, again, there's copper is in the category of commodities. They're very interesting to a lot of people for reasons we understand. Maybe you get an exploration company going and they hit the jackpot. You can make generational money. The world certainly needs it. There's money to be made, picks and shovels. I get it. It feels real. It's tangible. All of that is fine. Just be mindful that the long-term real price of all of these commodities is lower, and it's hard to make money when you're swimming against that current. And so, betting on copper itself as a commodity is just we just think there's better things to invest in. Now, if you think the copper markets are going to tighten because copper prices are going to go up temporarily, well, then maybe you get involved in a copper recycler. Or maybe you get involved in a company that makes copper recycling easier. You see, the mindset is just different. Like, how do I hitch my wagon to volume and not necessarily price?
Yeah. You mentioned when you mentioned the recycling and everyone is going to try to strip any copper out of any and everything. You reminded me of this time. This was a time in my life when I was young, and I used to work for this guy, and I later learned on he was a drug addict and stuff. But they were like functioning drug addicts. It was kind of interesting, but he used to hire me to come and like smash these. He would collect like these computer monitors from schools that they didn't want anymore, and then he would hire me. We'd go to a storage unit, smash up these computer monitors, strip out the copper, and then take it to the recyclery. So yeah,
there you go. That was you sure he took them from school? So
Yeah. He definitely could have done that. So yeah, that was definitely an interesting time in life. So thoughts on silver? I do want to touch on gold and silver. So silver, obviously, there's a recent chart that's been going around about China importing the most amount of silver that is imported in a long time. Obviously, the bull thesis is that silver is a byproduct out of these mines, there's hardly any pure silver mines out there, and the demand for silver continues to rise. And so, curious in your thoughts on silver, and are you bullish on it? Let's just ask that.
Okay, so silver is an industrial metal today. Unlike gold. So gold is not a commodity. Gold is a monetary metal. So back to silver. What's the leading industrial use case for silver today?
Solar panels.
Right. Did you know that China's going to install far less solar panels in 26 than it did in 25?
No, I did not know that.
Here's why. China's grid is run on coal. Coal is not very dispatchable. It's baseload, but it's not dispatchable. And the amount of solar that China has installed in its grid is beginning to overwhelm its dispatchable power, i.e. hydro, natural gas. It doesn't have much in the way of natural gas. China's dispatchability is hydro. And so suddenly, in 2026, looks like it's going to be as much as 30 or 40% fewer solar panels installed in China this year than last year. And industrial metals are flow analyses. So the market cleared last year, and you had this blow off top at the beginning of the year, above $100. A lot of stuck longs at that price. A lot of people who got in the euphoria. And so when I look at silver today in the 70s, and I see a deceleration of growth in solar, especially in China, I wonder why China would be importing. And again, we talked about China being a black box. Just because you see it on Twitter doesn't mean it's true. We can do the calculation, and we've wrote about it, and it'll be an example in the book we're writing. You could see a year ago that China couldn't sustain solar at these rates. Is the bullish case for silver really there? So that's my answer on silver.
Okay, yeah, thanks for sharing that. Yeah, because I was thinking about, obviously, silver is an industrial, historically has had monetary implications for it, and so, or monetary uses. And I was kind of wondering about India, because it seems like in India, they still use silver as a store of value, gold as a store of value and such. And so, but it does seem like the industrial side has taken the narrative. The monetary side is hardly even talked about outside of like stackers and equity investors and such. But I think that's a significant, like way smaller than the industrial side.
Look, I think if you're interested in a monetary metal, just buy gold. And in fact, I would venture a guess that in India, gold is far more popular than silver. And so because silver is an industrial metal, which is how I started my answer, it's no different than buying copper. You buy it for the industry fundamentals, and I just gave you a bear case for the industry fundamentals of silver that you won't find on Twitter. Yeah, that's our view. Yeah.
Got it. Okay, so any thoughts on gold? I mean, obviously, many of us buy gold as a store of value to preserve our purchasing power. Any thoughts on how the metal's been performing, or is that something that you're...
Yeah, it's been inversely proportional to war in the Middle East. So when it looks like the war is going to kick off, gold tanks, and when it looks like peace is going to break out, gold rallies. We find that interesting. We have a simple explanation for that, which is that the Gulf countries own a lot of gold. And if they can't sell their oil, they have to sell their gold. And so, if the war were to end tomorrow, hopefully, because I own a lot of gold, we'd see it rally. That is the one thing I do own in size, is gold. And, since I buy it every month with some of my savings, if it goes down, I'll just buy more ounces. But I would like for it to go up. And so, yeah, I'd like for the war to end.
Yeah, for sure. Okay, and then just before we wrap up, we used to talk a lot about uranium and such, and so I got to get an update on your thoughts there on uranium.
uranium's a commodity. A couple of differences between uranium and oil that make it more attractive. If you're looking for reasons to make uranium more attractive than copper or oil or silver or the other commodities we've discussed, one is that the price of uranium could double or triple from here and nobody would care because the impact on electricity prices is de minimis. Fuel is a very small input into the operation of a nuclear power plant compared to, say, natural gas or oil. You feel that at the pump immediately when oil doubles. Not so much with uranium. And then also you have the Sprott Physical Uranium Trust, which is a totally legal attempt to corner the market in uranium. And you don't have that in these other markets, at least not that we can see. You know, the Hunt brothers tried to do it in silver. And so because you have Sprott gobbling up incremental supply, that makes it behave differently than most commodities. Having said all of that, would we own it? No. But it's not a space we follow, and so it's not like we have the expertise to time it either.
Okay, got it. Well, Doomberg, appreciate you for coming on the show and giving us your thoughts and updating us on a variety of your publications. So you all be sure to go to Doomberg.com to check out these publications and to, I mean, really, I think it's important that we challenge our own thesis, you know,
Sure.
And I think that's some of the value that you all bring.
Appreciate the opportunity, Darrell, and talk again soon.
All right, talk soon. You all please hit the subscribe button if you haven't subscribed yet. Love to have your support, and thank you all for watching.